Well, meantime, a new warning to the White House from some of the oil industry's top bosses as the Iran war approaches yet another week without a deal. As you already know, the squeeze on the Strait of Hormuz has sent gas prices surging here at home and all around the world. But according to new reporting, oil executives say the world's petroleum market is about to hit critical levels as inventories are draining, which will likely cause another surge in prices. Despite this, we continue to hear President Trump say prices will come back down.
Gas will go down. As soon as the war's over, it'll drop like a rock. There's so much of it. And when it ends, your gasoline prices will go down lower than they were before.
But the American people, sir, are seeing higher gas prices.
Yeah,
now, it's come down a little bit, but it's still $4.45.
Oh, it'll come down a lot. It'll come down to where it was before. We had it.
But even if a deal was reached today, according to S&P Global, it could take 6 to 8 months in a best-case scenario to get things back to levels seen before the war started. So Jay Young is the founder and CEO of King Operating Corporation, which is an oil and gas operator and investor in Dallas. Jay, thanks so much for your time today. How dire is the situation right now when it comes to the world's oil supplies?
Yeah, it definitely is. It's a big problem. It's going to be a bigger problem going into the future because we're not going to have the oil necessary. I'm at a heart conference right now in Houston, Texas, and I've listened to a lot of executives, a lot of big CEOs at this conference, and they're saying the same thing. We're just not going to be able to produce the type of oil. We need 100 million barrels a day in the world. We need 20 million barrels in the United States. 20% of all oil production in the world goes to the United States. We're not producing but 13, and the world's producing 90. So the world is, what you see here, you see the U.S. oil and petroleum, this is the inventories in the United States, but that's evaporating not only in the United States, but all over the world because oil wells are being shut down, especially in the Persian Gulf. They're being shut down. So we're taking a lot of our supplies that we have in all the strategic reserves around the world out right now, and we're not being able to produce it any more oil. And because of the problems, we're going to see huge shortages in the future. We're not going to be able to turn those wells on in the Persian Gulf, and if you can't turn them on and them come back to whatever they were producing before, which you can't, we're going to have a huge problem, and the world is going to have to find new ways to produce oil in the future because it's not going to have it, and it's going to take a long time. So fortunately for the oil and gas companies and oil and gas business, it's going to be a great thing because we're going to see higher prices for a long period of time, the next 3 to 5 years. But unfortunately for consumers, we're not going to see anything going to come down anytime soon. So be prepared for that. Go out and buy an oil stock or do something to offset it because you're going to need to. Because like I said, prices are going to come down. Unfortunately for the people that are driving, that are going on vacations this summer, we're going to see higher prices. I called it because we're not drilling as many wells in the United States as we were, 6 months ago, a year ago, 2 years ago. I didn't know the war was coming up. Obviously, who would have known that? But I knew that prices were going to go. We're going to start coming up because of the supply problems. Now we're going to have a huge supply problem. And not only in the United States, but all around the world. So we're going to see prices that are going to come up, and it's all because of supply and demand and how much oil we produce. And we're not seeing demand go down anytime soon. Everybody's still driving, and there's 6,000 products that go in oil or made out of oil. So the demand's there. It's going to be there, which means if the supply is not there, prices are going to stay steady. So
Jay, from your perspective, what needs to happen right now to start making things better?
Yeah, that's a great question. And we need the Strait of Hormuz to open up. Is that going to happen or not? I don't know. But if that could happen, we could turn on a lot of wells, or they could turn on a lot of wells up on the north side of that Strait of Hormuz, and then you can get a lot of that Persian Gulf oil. But if not, we need to continue drilling for oil. There's Alaska, there's Venezuela, there's South Africa. There's a lot of places around the world that need to be drilled, and we need that infrastructure in place. And that would help out a lot, but there's not really any immediate I mean, one of the key speakers here from one of the $1 trillion private equity funds yesterday said, why is oil only at $90 or $95? Oil should be at $200 a barrel. Because of the shortage of supply around the world, prices should be a lot higher because you're not seeing the supplies out of the market.
Oh,
and
my
the demand's
goodness.
not going down that much. Exactly.
I can't even imagine if oil were $200 a barrel. My goodness. Okay, so there is that estimate from S&P that it could take, 6 to 8 months in a best case scenario. How long do you think it will take before we do get back to some sense of normalcy here?
Yeah, I don't know. I don't know what normal is going to be. It's kind of like after the COVID, but I don't know what normal is going to be. It's going to take a long time for us to be at levels to where you can see oil prices go down to $60, $70 a barrel. And because you would need a lot of supply around the world to open up. You need a lot of wells to come back online. Wells that are turned off, like right now in the Persian Gulf, there's 10 to 15 million barrels a day shut off right now. When you turn those wells back on, they're not going to come back on as strong as they were.
Jay,
And so
before we let you go, we're running out of time here. If you could say something directly to President Trump, what would you say?
I'd say continue to let us drill. There's a lot of states around the country that will not allow us to drill like we should, like California or Colorado. There's a lot of oil in the United States. We need to go get it. We need to be a big producer, bigger producer than we are right now. We need to be a bigger producer. Let's open up some more states. Let's get the rigs running and let's drill, baby, drill. Like you said, President Trump, you said it best. Let's drill, baby, drill. Well, there's some places around the world that we can't, or around the country that we can't, and we need to open up these places, and we need to be the answer to the supply problem around the world.
Yeah, because it's just going to continue to get worse. All right, Jay Young, founder and CEO of King Operating Corporation. Thanks so much for your time.